Hi, everyone. We're going to get started here in just a few seconds. I just want to give everybody a chance to jump in before we start. Hey, well, good afternoon, everyone. Welcome to our webinar on Pennsylvania taxes for new businesses. I'm Cindy Nellis. I'm the director here at Penn West Clarion Small Business Development Center, and I'm very happy that you have chosen to join us today. So the Pennsylvania Small Business Development Center, we are partnering with the Pennsylvania Department of Revenue to present a 4-part series offered monthly. Here's our flyer. Today's topic is Pennsylvania taxes for new businesses, but as you can see, the other 3 topics are getting started with MyPath, sales tax basics, which we'll be holding next month, and withholding basics. So we hope you plan to join us for some of these topics in the months ahead. I'll also be sending this flyer to you as well, so you'll be able to more easily register. So today's presentation will help you learn and understand the rules, laws, and procedures to follow as an entrepreneur and a business owner. Most tax delinquencies often stem from misunderstanding Pennsylvania laws and regulations and procedures. So we will highlight some common errors, discuss income tax, sales and use tax, exemption certificates, and employer withholding tax. In addition, you will learn today some guaranteed tips for success and your rights as a Pennsylvania taxpayer. Before we get started, let me review a few things. We are recording today's webinar, and we will share that recording with you, along with the presentation slides that you see, and again, our flyer. All participants have been muted and your video has been disabled. So if you have a question for our presenter and her colleagues, please feel free to enter them in the Q&A. If you have a question for me, your host, I just ask that you enter it in the chat window. So before we get started today, though, I'd like to introduce you to the Pennsylvania Small Business Development Center program. We are grant funded with a mission to help businesses start, grow, and prosper. We focus on providing education, information, and tools to help businesses make better business decisions. We do this through our one-on-one business consulting services and our training. Our consulting services, as you can see, are provided at no cost and they're confidential. We offer a variety of training seminars on topics that target the needs of small businesses. And to us, a small business is generally defined as a business with less than 500 employees. So we can work with a broad range of businesses throughout our state. We also use our funding to provide access to database information and resources related to conducting industry and market research, financial analysis, and of course, implementing marketing strategies. The Small Business Development Center partners with many economic development organizations too, to help connect business owners with many more resources to help them start and grow their business. And in Pennsylvania, the SBDC network includes 15 centers. All the centers are located at institutions of higher education, which is great. We're excited about partnering with great institutions where we utilize resources from them as well to help you. We are also a part of America's Small Business Development Center, which is a national network that enables individuals and businesses all over the United States to access our program services right in their neighborhood. So this is just information of how you connect with the Small Business Development Center. We give you our website. We also give you the email to me and my center. So if you have any questions, you can connect at any level and we will help you get your questions answered and hopefully work with you one-on-one. So to get started, I'd like to introduce you to our speaker. Alicia Gantz has over 12 years of experience working with the Pennsylvania Department of Revenue. She currently works as the Chief of the Customer Outreach Relations and Engagement Division within the Customer Experience Center. She's responsible for developing relationships with external stakeholders and coordinating any outreach and education initiatives provided by the department. Alicia began her career as a tax account collections technician working in the Collections and Taxpayer Services call center and moving into various roles throughout the collections and customer service. Her work experience has provided her with vast knowledge of Pennsylvania tax administration and the inner workings of the department, which she uses to provide positive experiences for the department's customers and its stakeholders. So with that, Alicia, I will turn it over to you.
Thank you, Cindy. Give me just a second to share my screen here. All right, does it all look good?
Looks great to me.
Perfect. Okay, so good afternoon, everyone. As Cindy mentioned, my name is Alicia Gantz. I am the Chief of our Customer Outreach Relations and Engagement Division here at the Department of Revenue. I know that sounds like a lot, but essentially my area handles the outreach and education efforts provided by the department. So we are the ones who attend these events every month with the SBDC. Also, if you ever need additional content, like beyond the modules that we're covering, have that conversation with Cindy and we can work to get those developed for you. So today our presentation is on Pennsylvania taxes for new businesses. And as part of that presentation, we're going to cover some income tax overview, trust fund taxes, business use tax. We'll talk about exemption certificates, go over some tips for success, and then your rights as a taxpayer. So let's get started with income taxes. All businesses have an annual income tax filing requirement, the same as any taxpayer. So the type of business structure that you have determines what form that you're going to use when filing. Sole proprietors report their income and expenses using the PA Schedule C, which is profit or loss from business or profession for each business. The owner of a single member LLC that receives net profit income reports its income and expenses using the PA Schedule C as well. The owner of a single member LLC that owns and operates a rental property reports its income and expenses using the PA Schedule E, which is rents and royalty income. And then partnerships, both general and limited, are required to file a PA 20S/PA 65 information return and provide each PA resident partner with the PA Schedule RK1, and then each non-resident partner with the PA Schedule NRK1 if the partnership is taxed as a partnership for federal income tax purposes. In addition to income taxes, you may also have what we call trust fund taxes. So trust fund taxes are collected by the business owner and then held in trust until they're paid to the Commonwealth. There are 5 taxes that represent trust fund money, but today we're going to mostly focus on 2 of them that will likely pertain to your business, and that's withholding tax and sales tax. On the next slide, we'll talk about what those 5 taxes are, but like I said, we'll really drill down on those withholding and sales taxes. It is important to remember that these taxes must be reported timely and remitted in full to the Commonwealth. So again, you're simply holding these taxes in trust until you file and pay. Please keep in mind that these funds should not be used to cover business or personal expenses, and we suggest that you keep the funds in a separate account until you are ready to remit them to the department. So there are consequences for using trust fund money for anything other than what it's intended, and we're going to talk about that later on in the presentation. So this slide here shows all 5 taxes that represent trust fund money. Some or all of these might pertain to your business. The first one is withholding tax. So that usually occurs when an employer withholds state income tax from an employee's pay and then remits the money to the state. The second one is sales tax. So sales tax is levied on the sale of taxable tangible personal property and then certain services. The next 3 taxes are mainly associated with vehicle leases and rentals, as well as the new tire fee, and they collectively fall under what we term PTA taxes and fees. So PTA stands for Public Transportation Assistance. The vehicle rental tax pertains to car rentals from businesses with an inventory of 5 or more vehicles for rent. And then the tax on liquid fuels is just what it sounds like. This tax is endured by the consumer, although the distributor is liable for its collection and payment. Please note that trust fund taxes must be accounted for on the accrual basis of accounting. So accrual accounting looks to match revenues and expenses based on the business cycle of the firm, rather than the actual inflows and outflows of cash. Therefore, sales tax liabilities are recognized at the point of sale and not when the cash is actually received. So we'll talk to that a little bit more in just a few slides as well. So let's dive a little bit deeper. First up, we have withholding tax. So the first question is, what is withholding tax? As I mentioned, withholding tax is usually when an employer withholds PA personal income tax from an employee's pay and remits the money to the state. In MyPath, which is our customer portal, you will see withholding tax broken down into 3 different withholding types. So the first withholding type is employer withholding, which applies to regular W-2 employees. Next, we have other income withholding. This is for non-wage withholding reported on a 1099 miscellaneous or a 1099 NEC. So typically for small businesses, this applies to independent contractors. So if you hire independent contractors, you likely need an other income withholding account. If you do need assistance with determining whether somebody is a W-2 employee or an independent contractor, you will need to determine a few different things. There's questions like, is the worker being hired for a temporary project? Can they choose where and when the work is performed? Do they use their own materials for the work performed? And are they paid a flat fee or an hourly rate that's invoiced? As a rule of thumb, if you answer no to all of the questions, chances are they are a W-2 employee. But if you are uncertain about whether they're a W-2 employee or an independent contractor, we recommend that you complete the federal form SS8, and then the IRS will help make that decision for you. Looping back to the types of withholding, we mentioned that there are 3. So the third and final withholding type is retirement withholding. This is reported on a 1099-R, and it applies when withholding is taken out on retirement income. In the state of Pennsylvania, withholding is taken at the time of the retirement contribution, not the distribution, provided certain qualifiers are met at the time of withdrawal by the employee. This is most likely not going to pertain to business owners. Most of the time, retirement plans are administered by a third party. So chances are, if you're dealing with withholding tax, it's going to be the employer withholding and the other income withholding. So the next question that we have here is, when do I withhold? If your business is a sole proprietorship, partnership, association, corporation, government body, or other entity that employs 1 or more persons, it is required under the Internal Revenue Code to withhold federal income taxes from wages paid to an employee. You are then required to withhold and remit Pennsylvania personal income tax from the compensation that you pay your employees. So therefore, the simple answer is every time that you issue a paycheck is when you're withholding. Pennsylvania law requires employers to withhold Pennsylvania personal income tax from employees' compensation in 2 common cases. So when resident employees perform services within or outside of Pennsylvania, and when non-resident employees perform services within Pennsylvania. Currently, Pennsylvania's personal income tax rate is 3.07%. So that means you would withhold 3.07% for any employee who lives in PA, regardless of where the work is being performed. And you must withhold 3.07% from any employee who lives outside of Pennsylvania, but the work is being performed in our state. All right, the next question we have is, when is it due? So the current schedule for employers to withhold and remit employee taxes on wage and salary income can vary. So the frequency for remittance is based on the amount of withholding that is required. Basically, what that means is the greater the amount of withholding, the more frequent that you are required to remit that to the state. The return itself should be filed every quarter. And then there is a W-2 reconciliation that gets filed at the end of the year. So you file quarterly returns, an annual reconciliation at the end of the year, and you remit the payments on a frequency based on how much you're collecting. So then our last question here is how to file and pay. The department does have a customer portal. It's called MyPath for customers to electronically file. MyPath is an internet-based filing system, and it allows taxpayers to file returns and make payments without cost. So it is free to use our portal. You just go to mypath.pa.gov, and then you would need to sign up for a user profile. If you are familiar with MyPath at all, you may know that the MyPath portal has both logged in and non-logged in functions. Most business tax transactions must be completed as a logged in user. Therefore, in order to do most things for business taxes, you do have to actually create a profile. If you do need help with creating your profile, we have published several Revenue 411 videos. And these videos provide step-by-step instructions for using MyPath. So there's definitely videos out there for creating a primary user profile. Before we move on, it is important to note that under regulation, any payment of $1,000 or more must be remitted electronically. So some folks still ask if they can mail in payment, and whereas the answer is always yes, if that check or money order is over $1,000, there will be an EFT penalty posted to the account. So strongly, strongly encourage you use MyPath to make your payments. And then on a final note, if you have any questions related to withholding tax or the requirements, I would encourage you to check out the REV 415 Employer Withholding Information Guide for any additional details. I do see an answer or a question that came in through the Q&A. I have some folks that are on the line as well to help answer those questions. So feel free to pop your questions out there as we're talking through this. And if we have time to get to any at the end, we'll definitely make sure that we do that. All right, so next up here we have sales tax. Again, what is sales tax? So Pennsylvania sales tax is levied on the retail sale, consumption, rental, or use of tangible personal property, including digital products and certain services. Currently, Pennsylvania sales tax rate is 6%. However, by law, a 1% local tax is added to purchases made in Allegheny County and 2% local tax added to purchases made in Philadelphia. There are some major items exempt from sales tax, which include food that's not ready to eat, candy and gum, most clothing, textbooks, computer services, pharmaceutical drugs, sales for resale, and residential heating fuels such as oil, electricity, gas, coal, and firewood. Generally, services to the human body, such as haircuts, massages, etc., are also exempt from sales tax. And then additionally, permanent landscaping services, not grass cutting, are generally exempt. We do have an REV 717, which I'm going to reference a few times. We don't talk too much about what is taxable and what's not taxable in this presentation, but that is a great resource for making those determinations. Next question here is, when do I collect sales tax? So sales tax must be collected at the time of sale unless the sale is on credit. So taxes due on credit sales must be remitted within 30 days of the date of sale. So a seller is liable for reporting and remitting taxes and fees with the tax return covering the period in which either a taxable sale was made or the tax or fee should have been collected. For those of you who are familiar with accounting terms, I said earlier that this is the accrual basis of accounting. The most commonly used accounting method, this is the most commonly used accounting method where a business reports income when earned and expenses when incurred, as opposed to the cash basis accounting, which reports income when received and expenses when paid. So let's talk through an example on that really quick. If in August you sell a widget for Sam or to Sam for $1,000, since the widget itself is a taxable item, you would charge Sam the 6% sales tax, which is $60. However, if Sam only pays you $640 in August and promises to pay you the remaining $420 in September, under Pennsylvania law, you're required to remit the full $60 of sales tax due on the sale of the widget in August. Please be aware that the seller may be assessed for failure to collect taxes and fees plus charge for the appropriate penalty and interest. So as I mentioned, you might have questions about what sales and services are taxable. The REV 717 Retailer's Information Guide is a fantastic resource for defining a lot of that. And then as always, if you have additional questions beyond that, we're here to help you out. So even beyond this presentation today, if you have questions, please get with the Small Business Development Center. If they need to reach out to us, they have contact information and we can help to get some materials out to you. All right, so the next question that we have here is, when is sales tax due? So unlike withholding tax, sales tax filing frequencies might vary. So when you're a new sales tax filer, you are set up as a quarterly filer, meaning your returns are due in April, July, October, and January. But your filing frequency can change. So every year, the Department of Revenue reviews each business that files returns to determine whether or not the filing frequency should be changed. If such change is made by the department, the business will be notified in writing. It is very important to pay attention to these notices because you don't want to be in a position where you were a quarterly filer that's been changed to monthly. Maybe you threw your notice out and now you're unaware, you're going to get hit with some penalties and interest that you really don't want to be charged. So again, don't just blindly throw away notices from the Department of Revenue. All right, and our last question on sales tax is how to file. Like withholding tax, we encourage you to use MyPath for filing and paying. Again, you do have to have a user profile, so it is important to sign up before getting started. Just to clarify, if you have already established your tax accounts, you're going to create that user profile first, because you're going to sign up and then you'll gain access to your tax accounts. If you have not already registered for any tax accounts with Pennsylvania, you're just getting your business up and running, you would register from the MyPath homepage. And then once you've completed the online business registration, you'll get a confirmation number and you can use that number to sign up for your profile. Hopefully that doesn't cause confusion, but if you have questions, we can talk through that at the end. The department also has third-party vendors who will provide e-filing software for those taxpayers who do not wish to use the department's e-filing option. We do have a list of approved software vendors available on our website. So our website is revenue.pa.gov. We'll put that up on the slide a couple times later on in this presentation. But you also want to note that just like withholding tax, under regulation, any payment of $1,000 or more must be remitted electronically. So definitely make sure that you are using those electronic services out there. All right, so moving on to use tax. Use tax by no means is unique to Pennsylvania. So every state that has a sales tax also has a use tax. The purpose of use tax is so that Pennsylvania's businesses are not put at a disadvantage to businesses who do not charge sales tax. Sales tax is imposed on taxable goods and services at the time of sale and collected by the seller. So in instances where the seller does not charge the sales tax on taxable items, the purchaser is responsible for remitting the tax on their first use. So this is called use tax. Use tax exposure occurs most often when a business buys taxable goods over the internet or through the mail, and the seller does not charge PA sales tax. In these cases, the purchaser must pay their use tax obligation in the month following the month of receipt into Pennsylvania. So again, if I'm buying it and paying for it and receiving it in Pennsylvania in April, it's due in May. If you don't have a sales and use tax account, there are a couple different ways that you can report use tax. So if you do report it with your sales and use tax filing, that is considered timely as long as you're filing that return timely. This is also true for purchases that a business makes while out of state where no sales tax is charged. So the item becomes taxable upon delivery into Pennsylvania. The department's audit experience shows that most businesses owe use tax, but many businesses do not actually pay use tax. So it is estimated that upon audit, approximately 80 to 90% of businesses are found to have some type of use tax obligation. Use tax itself also applies to individual customers, so it is not just a business tax. We do have a voluntary use tax voluntary compliance program, which allows you to go through your records, voluntarily come forward and pay any use tax liabilities. If, say, this is the first time that you're hearing about it, you don't need to get super stressed that maybe you haven't been reporting it for a long time. We do have some options out there that will help relieve some of the penalties associated with the late reporting of that. All right, so the next question we have here is, how do I file and pay? So any business that incurs use tax liabilities on a regular basis is encouraged to register for a sales and use tax account, and that can be done via MyPath. If you are already registered for a sales tax, then you can file any use tax due along with your sales tax return. If the sales tax return is filed timely, then the use tax is considered timely no matter what filing frequency your business is on. If you are not required to be registered for a sales and use tax and you have a use tax liability that needs to be paid, you can still file the use tax return electronically through MyPath. You just do that right from the MyPath homepage. So not even logging into your account, you scroll down, I think it's the additional, or I'm sorry, the returns panel, there's an option to file a use tax return. All right, and when is it due? Again, that's going to depend on what method that you're using to file. If you're filing with your sales and use tax account, which is the way you should be doing it most often, it's considered timely if your sales tax is filed timely. Okay, so while the sound of filing and remitting use tax might seem unsettling, remember that our education and enforcement of this tax is